that we improve their availability, ensure 100% availability. We are also continuously mapping out our customer journey in our products, in our services, to make sure that as you interact with these various touch points, that your customer experience is seamless and delightful. Let me end this by wishing you a happy customer week, and to say that we at Family Bank really value you and you're at the heart of our existence. Ladies and gentlemen, my name is Rebecca Mbithi, the CEO of Family Bank, and I'm delighted to welcome you into the Customer Service Week. This is a week where the world celebrates and acknowledges the importance of a customer to an organization, and also the role played by the staff who are instrumental in giving a good customer experience to the customers. On behalf of the board, management, and staff of Family Bank, I want to take this opportunity to thank you, our customer, for having chosen Family Bank as your preferred financial service provider. Thank you, our customer. Inception in 1984. It has been quite a journey, and we are where we are as an institution because of you. In the last 3 consecutive years, we have been delighted as Family Bank to have been honored as one of the top banks in Kenya in digital experience and customer responsiveness. We attribute these accolades to you, and indeed it promise you that customer experience will continue to be at the heart of our strategy, and we are purposefully and intentionally working on improvements in the following areas. First, to improve our digital experience in our channels and make sure that we improve the availability, ensure 100% availability. We are also continuously mapping out our customer journey in our products, in our services, to make sure that as you interact with these various touch points, that your customer experience is seamless and delightful. Let me end this by wishing you a happy customer week, and to say that we at Family Bank really value you and you're at the heart of our existence. Ladies and gentlemen, my name is Rebecca Mbithi, the CEO of Family Bank, and I'm delighted to welcome you into the Customer Service Week. This is a week where the world celebrates and acknowledges the importance of a customer to an organization, and also the role played by the staff who are instrumental in giving a good customer experience to the customers. On behalf of the board, management, and staff of Family Bank, I want to take this opportunity to thank you, our customer, for having chosen Family Bank as your preferred financial service provider. Thank you, our customer, for having walked the journey with us since our inception in 1984. It has been quite a journey, and we are where we are as an institution because of you. In the last 3 consecutive years, we have been delighted as Family Bank to have been honored as one of the top banks in Kenya in digital experience and customer responsiveness. We attribute these accolades to you, and indeed it is you who has voted us consecutively for this award. So we promise you that customer experience will continue to be at the heart of our strategy, and we are purposefully and intentionally working on improvements in the following areas. First, to improve our digital experience in our channels and make sure that we improve the availability, ensure 100% availability. We are also continuously mapping out our customer journey in our products, in our services, to make sure that as you interact with these various touch points, that your customer experience is seamless and delightful. Let me end this by wishing you a happy customer week, and to say that we at Family Bank really value you and you're at the heart of our existence.
All right, ladies and gentlemen, good morning. Karibuni sana to this insightful session that we have planned for you. I can see people trickling in slowly. We are currently at 29 attendees. Helen, we are glad to have you. I can see you in the chats already. You started engaging with us, chatting with us. Keep chatting with us throughout the entire session. We are about to begin the session shortly. I think let's just give it a minute or two for other participants to join in so that we can have a good number and begin the session. We have quite an insightful and engaging session planned for you this morning, and we are truly honored to have you. If you're already settled in with your cup of coffee, your cup of water, tea, and ready for this webinar, head over to the chat section. Let us know where you're joining us from. We'd be glad to hear where you are this morning and how you're going to receive this webinar. So head over to the chat section. Let us know where you're joining us from. Helen Otieno, where are you joining us from? I can see David. Hi, David. Where are you joining us from? I can see Kamanzi joining us from Uganda, Kampala. Welcome. Helen is joining us from Mombasa. Glad to have you, Helen. We have David from Homa Bay. Karibu sana, David. We have Ruth from Syokimau. We have Otieno. Good morning, Otieno. Joining from Nairobi. Okay, good. Jessica from Gatundu. Great, 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 great. We have Christopher from Qatar. Okay. Sheila, Nairobi. Michael, Nairobi. Karibuni, karibuni, karibuni. We have Dorcas, Nairobi. Nancy, Nairobi. Karibu sana, Nancy. All right, good, good, good. Keep the comments coming. Benson, Nairobi. We're glad to have you all. We also have Duncan, Nairobi. Karibu sana, Duncan. All right. So I can see a couple of people have streamed in. So I think that's a good time to start. This is a good number to start with. We're currently at about 35, and I hope there will be other people joining us shortly. So let me start by thanking you all once again for honoring our invitation this morning. We're really glad to have you here this morning. Just before I begin the session, let me just set out some ground rules so that we can ensure that everyone enjoys the webinar. Number one, keep your microphones on mute, just to ensure that there are no disruptions during the course of the webinar. Kindly ensure that your video is turned off. We'll be happy to see your faces, but I think for this session, you're stuck with mine. So kindly keep your videos off at all times. If you have any questions related to the webinar, feel free to jump into the chat section. We have a dedicated team from Wild International, from Family Bank, from CPF, who are ready to answer any and all the questions that you may have. You may have had questions that you had thought about before you joined this webinar, related to the topic, or questions related to the presentation that we're actually going to go through in this session. Feel free to just jump into the comment section and let us know how you're feeling and share whatever questions that you may have. Finally, and this is the most important, this webinar is for you. We created it or curated it for you. So we want you to engage as much as possible. The chat section is for you. Feel free to use that as much as possible. We also have another feature. If you look at the bottom of your screen, we have an emoji feature. So if you're feeling happy, throw us an emoji every once in a while. If you're feeling sad, perhaps you've not been saving, maybe your investments are not in the right place, you can put like a sad face there and let us know. And hopefully the point is at the end of this webinar, we'll all have smiley faces. I can see a couple of hearts flying. We love you all. I think in the spirit of Customer Service Week, we are truly, truly grateful to have you. Without you guys, there would be no us. So I think with that, let's jump into it. I'd like to set or maybe start by introducing myself. So my name is Robert Njenga. I will be your moderator this morning. As you can see from my screen there, I'm the head of marketing and partnerships at Wild International. Now, Wild International is a business consulting firm. We've been supporting businesses and SMEs for the last 20 years. We are also, we specialize in providing strategy services, so developing and executing strategies for SMEs, essentially businesses of all sizes. Above and beyond that, we are members of an organization called the Sandbox, which is a collection of over 33 experts, all geared towards providing support to SMEs. So we actually say the Sandbox is a one-stop shop for SMEs, where if you have any challenge, be it HR, marketing, tech, you just walk into the Sandbox and there'll be someone there to fix that problem for you. At the Sandbox, we are the strategy experts, and we've been helping businesses scale and grow for quite some time. Above and beyond that, we do work with like-minded partners such as Family Bank and CPF, who have joined us on this call this morning to run sessions such as these. I will go a little bit more into detail in terms of our partnership. But above and beyond that, we also work with other organizations, both locally and internationally, to run various entrepreneurship programs that are geared towards supporting entrepreneurs of all shapes and sizes. Just to mention a few, locally, we're currently working with an organization called Brighter Monday. I'm sure all of you may have heard about Brighter Monday. If you're looking for a job, you must have stumbled upon Brighter Monday. We work with them there's an e-commerce program that we're working with them on to support the youth. We also internationally work with an organization called Aseli Africa, which is geared towards providing support to agri-SMEs. We're also working with an organization called Meta. I'm sure all of you here are familiar with Facebook, Instagram, and WhatsApp. We are working with them to provide digital literacy skills to the youth and SMEs as a whole to help people improve their businesses. So I can go on and on about Wild, but I think maybe we would require another webinar. And I think that applies for all the partners here. If we would require a whole webinar to go through everything that Wild does, we would require a whole webinar to go through everything that Family Bank does. And similarly, I think we'd also require a whole webinar to go through everything that CPF does. But I think with that, we can jump into the main discussion of the day. What has brought us here today? And that is savings culture and investment. As I mentioned before, as Wild International, we do work with a lot of partners to try and support SMEs. So it's important for me to recognize that Family Bank is the main sponsor and the main partner for this webinar. They curated this particular webinar to provide support to their customers and anyone who perhaps may be considering to join their banking services. So a big thanks to Family Bank for organizing all this. I think without you, this would not have been possible. Secondly, I'm joined by CPF Financial Services, who are the expert, subject matter expert for this particular webinar. If you know anything about CPF, you know anything to do with savings, anything to do with investments, they are the go-to guys. So a big thanks to our partners. We look forward to hearing from you throughout the session. So the main discussion for the day will be savings culture and investment. And just to perhaps set the context a little bit. I think we are all aware that I think in this day and age, times have become so difficult. I mean, maybe if I can just see by a show of hands or maybe just an emoji, how many of you are suffering from high fuel prices? Maybe nowadays you're not taking your car to work, you're parking, maybe you're carpooling, before you used to go, you're driving you just by yourself. Now, about 5 of you in the car, all chipping in, deductions, maybe the pay slip that you're getting or in your business, a little bit more taxes that you have to look at, currency, right? The dollar it keeps on getting stronger and stronger by the day, and our shilling is suffering. So I can see a couple of faces there. So these are problems that we are all facing as a nation, and I can also see maybe we have people joining not just from Kenya, but I think globally there are a couple of shocks that have been happening over the last few weeks, months, and even years that have made life a little bit more difficult than it was. So with that being said, it then begs the question, with everything that is happening, are you still able to save? Right? With everything that is happening, the high fuel prices, with all the higher food prices and everything, are you still able to set some money aside and save? Right? And more importantly, because the savings that you put in today are essentially what will ensure that the challenges that you're going through right now do not last for long. So are you saving? Do you have a savings culture? And if you are saving, are your savings building wealth for you? How many of you have your savings underneath your mattress, right? Right now, if I tell you, if you're joining us from wherever you're joining us, for you to check your savings, you just have to look underneath your bed and tell us, I have 5,000 in savings. How many of you have your savings under the mattress? So that's what we're here to discuss today. Do you have a savings culture, and what kind of investments you can look at to grow wealth and have your wealth grow for you? So just a quick overview of what we'll be looking at. We'll be looking at life mapping. Do you have a plan for your life, your savings 5, 10, 15 years, 30, 50 years from now? We would like you to be here for 50 years to come. Do you have a plan for that? How does your financial future look? Do you know how you're going to get there? Have you saved enough already? Or are you beginning to earn a little bit more? Common savings and investment mistakes. I'm sure we've all told ourselves, I don't have enough to save. Right? I will wait until my salary is increased, or maybe there's a deal that I'm waiting for that will change my life to begin saving, right? And then finally, building wealth through different investments, right? Is your money seated underneath your mattress? Is it seated in an investment that is not earning you as much as money as possible, right? I'm sure you may have heard of a saying that goes like this. Money is a terrible master, but an excellent servant. I'll repeat that for the ones who may not have heard that. Money is a terrible master, but an excellent servant. And basically what that means is your money working for you, right? When you're asleep, when you're working, do you have other sources of income, right? So those are the kind of things that we'll be looking at as we dive into this session, right? And hopefully by the end of this session, you'll have a holistic analysis of your savings and investments. And then you should also be able to decide and measure what different investments you can get into, right? So in order for us to deliver this webinar to you effectively, I'm just going to walk you through the program for today. So as I mentioned, we do have quite a number of partners on this webinar, starting with Family Bank, who are the main partners. I will give them an opportunity. We'll start with with an opening statement from them. They'll just let us know about what they're doing for Customer Service Week, what they're doing for customers in general. Then we'll move into the main dish, which will be conducted by CPF Financial Services, conducted by Happy. And then right after that, the session will be about 45 minutes. We'll also have a break in between the actual main presentation. After that, we will have the Q&A session. And that's why we're encouraging you to jump into the comment section, leave any questions, because we'll have a whole dedicated section just for that. Finally, we'll then have the vote of thanks, and then hopefully we can also invite you for another session that we have tomorrow. So without further ado, I would like to invite Joyce Nyawera, but right before I do, I just want to introduce her briefly so that you can get a better understanding as to why Family Bank are so good at their customer service. So Joyce Nyawera is the Customer Excellence Manager at Family Bank. As the head of Customer Excellence in Family Bank, Joyce is responsible for the delivery of the bank's customer excellence strategy that seeks to foster a culture of customer centricism and service excellence to support the bank's vision of growth to be a tier 1 bank. Right? She's a seasoned professional with over 20 years of experience in various functions, including strategy design and implementation, contact center implementation and operations, customer journey mapping, policies and processes formulation, service quality management, project implementation and change management, retail channel management, sales and marketing that spans across banking, telecommunications, oil and publishing industries. She has over the years formed and led high-performing teams in challenging and diverse environments. I'm not done. I think I'm only a third way of this introduction. In the journey to transform Family Bank into a customer-centric bank, Joyce has successfully rolled out several strategic initiatives that have seen improved ratings on key customer experience metrics like Net Promoter Score, issues resolution rate, customer satisfaction score, among others. Under the leadership of Joyce, Family Bank has been awarded the Kenya Bankers Association, the best top tier 2 bank in customer and digital experience for 3 consecutive years. Right? In 2022, Family Bank was recognized as the overall top Kenyan in customer and digital experience. These awards are based on survey findings on customer satisfaction as done by the Kenya banking population, which is you guys. Joyce is an alumni of Strathmore Business School in leadership for the Leadership and Development Program, a certified customer journey mapping architect, Lean Six Sigma Green Belt practitioner, and is on the tail end of her MBA. Guys, wapi makofi. I think it all makes sense now why Family Bank is so good at the customer excellence. If that's the person who is behind all this, yeah, I mean, it all adds up. It all makes sense. Makofis are Joyce, makofis are Joyce. Good. We'll also have Jennifer, who's the head of diaspora at Family Bank. And above and beyond that, Jennifer, would like to know, we have often heard that Rongai, even sometimes Syokimau is considered diaspora. Is that the official position of Family Bank? Do you have some goodies for the people of Rongai and the people of Syokimau? You let us know all that. So without further ado, Joyce Nyawera, the floor is yours.
Thank you, Robert, and good morning, everybody who is on this call. Thank you for joining us this morning. I will share my presentation now as we start. Of course, I would want to just mention this is Customer Service Week, which is celebrated globally, and wish you all a very, very happy Customer Service Week. Robert, as I share, confirm that my presentation is clear.
Yes, it is.
Thank you. Okay, I will take a few minutes here just to introduce Family Bank. As Robert has mentioned, we are sponsoring a webinar in partnership, of course, with World International as well as CPF. So Family Bank was founded in 1984 by a gentleman called T.K. Moya. Many of you may have heard of him. and it became a fully fledged commercial bank in the month of May 2007. We currently have 93 branches spread over 32 counties and with a network of over 140 machines. Now, our customer base, that is yourselves and many, many others, is over 900,000 as at end of half one this year, that is end of June this year. And we are still growing, so these numbers are dynamically changing on a daily basis. We have an agency banking network with over 6,000 agents spread across the country. And essentially what we are trying to do is make sure that even if we are not in every single county and in every single town across this country, we are trying to make sure that our banking services are coming close to you through our PesaPap agents. We do have over 50,000 merchants across the country again. And the purpose of these merchants is to bring our payment collection solutions closer. And this is through services like the Lipa na Family, which we call the LNF. We do have the pay bills as well as PDQ machines. Now that is a PDQ machine that you're seeing right there, where you go and either tap or pay using your card. It's slotted in. The bank has a workforce of 1,500 plus, and this is the team that works very, very closely with you, our customers, just to make sure that your banking service requirements are met on a day-to-day basis. We also do have the digital financial services, and I can proudly say that Family Bank was the first bank in Kenya to launch a mobile banking platform. And this has become a basis, or let me say is in the front line of our digital services. The purpose, of course, of all this is to really bring convenience close to you. You do not even have to leave your desk or wherever you are to be able to transact or do your banking transactions. So over and above the PesaPap mobile banking, we also do have several cards, which include the credit cards, debit cards, as well as prepaid cards. We do have internet banking, and we have a Family Pay solution, which facilitates bulk payments, and of course, greatly then serves our business customers. Now, just to dive a little bit deeper, because these are some of the few proud moments that we have as customer service. This was mentioned by Robert at one point, and we have received awards. And what makes us most proud of these awards is that these awards are actually as per votes given by you, our customers. And in this particular slide, you can see our MD and CEO, Madam Rebecca Mbithi, receiving an award there, ABA MD, Dr. Habil Olaka. So I'll start with the current one, which was received early this year. In 2022, we were voted best tier 2 bank in this country in customer experience and second overall best bank in Kenya in customer experience. In 2021, we actually took the 2 top awards, which was best tier 2 bank as well as overall in Kenya in customer responsiveness and digital experience. In 2020, we took the first position as best tier 2 bank and overall best bank in Kenya, second position in customer responsiveness and digital experience. And I want to pause at this point and just say thank you so much for voting us, because these awards are really your affirmation that we are on the right path. So that's just some of us receiving the award. This was the most recently given award. That was in 2023, early this year, February. Just mentioned that Family Bank has really banked on technology to facilitate data-driven decisions. We currently have an enterprise feedback management system, which we use throughout the year, 24/7 basis. to collect feedback from yourselves. And we do this for both internal and external customers. Why? It's because we recognize that of feedback, we are customer oriented. And when we talk about being customer centric, it is your feedback that makes us improve and improve in the right direction. So your feedback does in strategy, processes intent, the automations that we put in place, and even what to prioritize as initiatives in the bank. Closer home, it brings to the fore our customers' desire for enhanced financial awareness. And that's the reason this particular webinar was put in place. And I can say that customers throughout, when we've been doing these surveys, one thing that has stood out is people want to be more financially aware. And I can even talk for myself as I know I'm a banker, I've been in the banking industry for very many years, but I can never get enough of learning about financial awareness. This is a landscape that is continuously changing, it's dynamic, and we must be aware and know where to move next. So let me talk about Customer Service Week. It was mentioned that this is the week that we are celebrating customers. We have two themes, as you can see from there. One is team service, and the other theme is driving CX agility. I will talk about that next. Customer Service Week was first established by the International Customer Service Association. It is now globally celebrated every first full week in the month of October. And this is actually the week which started on 2nd of October and goes on till this week. Now, celebrating Customer Service Week in Family Bank helps us reinforce our commitment to offer exceptional customer service in our bid then to become a customer-centric bank. Every year we do have themes that are guided. Globally, we do have the theme team service, and this is really recognizing the importance of the teams that serve you. So this is more internal. And driving CX agility, I'll delve a little bit into that. When I talk about CX, I'm talking about customer experience. So how do we drive then customer experience agility? What's the need for that? So customer experience agility, key aspects of it would be the aspects of flexibility. Are we able then to adjust our strategies, our processes, our services promptly in response to the ever-changing customer needs? We agree that our needs dynamically change over time. Your needs 2 years ago are not your needs today. And of course, as an organization, let's keep to that, but how best to do than to first listen to what you have to tell us and do the needful. And that's where the data-driven insights come in. We are continuously collecting feedback from yourselves. We are continuously monitoring changing customer behavior, preferences, so that then we are able to make decisions and make improvements internally that are going to serve your needs. On the backbone of that, then technology enablement is very important, so that then we are able to get this feedback and collate it and be able to then react to the needs in the market. Feedback loops, we can't overemphasize that, and we do thrive on that. And therefore, when we do send out our surveys, because we have automated systems in a way that our surveys are now real-time, as you're transacting, you will survey questions. Kindly take a few moments and just give us the feedback. Rate us, give us feedback, because that is how we continuously improve our services to you. So just to touch on what's happening this week, you can see across the bank, there is celebrations going on. We want to celebrate you, our customers. Free to walk into your branch or into the branch that is closest to you. There is a lot going on there. And I will end with a message from our MD and CEO. Allow me to read it. On behalf of the Board of Directors, management, and the Family Bank team, I would like to take this opportunity to thank you for choosing us as your preferred banking partner. Your continued support is the cornerstone of our success. Thank you for being the biggest part of our family since 1984. Our promise to you, our customers, is to remain focused on continuous evolution to ensure that we sustain world-class customer experience. Happy Customer Service Week, signed off by Madam Rebecca Mbithi, our MD and CEO at Family Bank. And the last slide that I have here is our contacts. Feel free to take down these contacts. They're available on our website in the communications that we continuously send you, even and on the adverts that we do. Those are our contacts in case you want to reach out to us for inquiries. If you have any issues that you would need assistance on, even compliments, we are happy to receive compliments. Kindly get in touch with us through any of those channels. And that brings me to the end of my bit. Back to you, Robert. Thank you very much.
Thank you so much, Joyce. I think you've given us a glimpse of everything that Family Bank is doing to try and make customer experience better for everyone, not just today, but throughout the entire year. I saw a bit of cake being shown in your presentations. Can people visit your branches for some cake?
Karibuni sana. Yes, kindly do. And the whole of this week, there is always something interesting and exciting happening at our branches. Karibuni sana.
Okay, thank you so much, Joyce. I can already see people interested in being a part of Family Bank. I can see Benson there talking about how they asking about how he can be part of Family Bank. Kindly take the contacts from the presentation, reach out to the Family Bank team. You can also reach out to them through their social media pages if you have any questions. As you heard from Joyce, they have a very robust feedback platform, which I think will capture everything and anything that you need from them. So thank you so much, Joyce, for that wonderful presentation. Let's quickly move over to Jennifer as we watch or have a look at the time. Jennifer, over to you as we sort of look forward to beginning the session. Jennifer?
Thank you very much, Robert, and Joyce, for putting Family Bank on the customer service map. And good morning, everyone who's attended this webinar. Thank you for your interest in Family Bank. My name is Jennifer Chege. I'm in charge of diaspora banking at Family Bank. And this is going to be a very exciting 5 minutes talking to you about diaspora. I'll start by saying who a diaspora customer is. A diaspora customer is any Kenyan who is living out of the borders of Kenya. Robert had said Rongai, that's how we do it locally, but a diaspora customer is anyone who is living outside of Kenya. You know how the Kenyan map looks like. Even Uganda, Busia, Uganda is a diaspora customer. So here at Family Bank, those are the people we take care of. I know you have relatives, friends living out there, maybe North America, Australia, or even back in Africa. So I'm just going to talk about our offering today for relatives, friends, and thank you so much for the people in the diaspora who've logged into this call. I heard of someone in Qatar, Uganda, TZ, Karibu sana. So I'll just start by saying about flagship products, and these are them Kenya Daima. We have customized products just for the diaspora. So we've looked at their characteristics, what they want to do back home, and we've come up with products that suit them well, meaning they are not coming to our branches. So why are we asking for ledger fees? We don't have ledger fees on their account. Then we offer foreign currencies, and this is USD, GBP, that's the sterling pound. We have the South African rand, we have the euro, and then we have the Kenya shilling account. Where we have the currencies, it only makes sense for any customer to open an account in local currency, that's Kenya shilling, and also have a foreign currency account. And now we are even happy that we are in the Pan-African community where the Kenya shilling will be accepted in the member country. So things are moving very well. So at Family Bank, you can open all those 5 accounts and you won't lose on Forex exchange. We can give you loans to buy or build. You want to buy a residential property, you want to build a residential property, you want to buy a plot or a commercial property, or you already have an existing property that has a clean title, we can finance you on that. And actually, if you have a property today that you do not know what to do with it, and you have rental income, it's mismanaged, we can also assist in rent collection via our very robust system of pay bill that will help you in identifying the tenants and the number of payments done. So in that space, in the digital space, we are #1 in that collection, knowing that you're away and most of the times you get ripped off. Then we have a competitive exchange rates. Just try us. You have money back there, foreign currency, and you want to get a rate here. We are very, very competitive. So you can call and just try to see the rate we are going to offer. No one beats us in the market. We are also giving asset finance for private motor vehicles. And this is something that we are doing over and beyond any other bank in Kenya. Because you have your family here and you'd want them to have days shifted from basic to a necessity. We can help you have one, and help customers do that before. Then we have an insurance program. This is mainly on the last expense, where you get to have a dignified way of bringing home your friends and relatives. And this is good because most times we see people going for fundraisers abroad there, and every time people are passing on because of this and that. And that's why we have a lot of mental wellness. So with family group, we don't have to stress over fundraisers that run for months. We can do that for you and bring back the motor remains in a very dignified way. In terms of you accessing your account, we have a very good platform in terms of mobile banking and internet banking. Internet banking and mobile banking, wherever you are. And one very good aspect about Family Bank is you can access mobile banking with your foreign. I repeat that, if you're living in Qatar, you can access mobile banking with your +97 line. For these other local banks, unless you have a Kenyan line. So we are a cut above local banking in terms of diaspora mobile banking. So you have a way to wherever you are. And the last aspect on my presentation would be on secondary investments. We are also helping you when it comes to treasury bills, bonds, and anything in the treasury market, custodial services. We're in that space and we can do all that for you. We have a dedicated team of relationship managers, and immediately you come in with us, we'll assign you a relationship manager. So you will not be calling all over the bank looking for someone to assist you and you're in the diaspora. We'll have someone taking care of you from onset. We also have a dedicated team that is there for you 24/7, and the diaspora unit is set aside as a virtual branch. So you do not have to keep talking to the branch, you'll keep talking to the diaspora unit. Thank you so much. We shall be giving our contacts on the charts. Please feel free to reach out, and we'll be happy to bank all the diaspora customers that you know of. And feel free also to reach me. I'll give also my cell phone on the chat. And thank you, and have a happy customer service week. Thank you, Robert.
Thank you so much, Jennifer. So I think the good news is Family Bank does not consider Syokimau and Rongai as part of the diaspora. So all these services are easily accessible to you at your nearest branch. I think, Jennifer, you've said a lot. There's so much you guys are doing for people in the diaspora. But I think if I could just sum it up, maybe you can tell me whether I'm right. You are providing dedicated and holistic support to people all over the world, right?
Yes, we are
Yeah.
all over the world. And we have relationship managers taking care of each and every region. And we've divided the globe into 5 regions: North America, Africa, Asia, and Middle East and Southeast Asia.
Mm,
So we are taking care of the whole market.
mm.
Yes.
Great. So from wherever you are in the world, Family Bank will be there for you. Thank you so much, Jennifer. So I think we can move to the next bit of the program, which is the main section for this webinar today. As you know, today our main discussion is around savings and investments. As I had mentioned earlier, for this session, we are gonna invite CPF Financial Services, the experts on all matters savings and investments, to walk us through in terms of, do we have a savings culture, or we don't even know what we are doing sometimes? In terms of investments, what are the best investments that we can look at? And finally, I think at the end of it all, we should be able to have a clear understanding as towards the steps that we should take to be a little bit more financially secure. So with that, I would like to invite the CPF team. So for this portion of the webinar, we are going to have Happy Kilongosi take us through a very, very engaging session about savings culture and investment. Before I have Happy come on, let me just quickly introduce her through her bio. So Happy is the manager of CPF Mwamba Trust Fund, which is under CPF Financial Services. Happy is passionate about estate planning, and this is how she has cut a niche for herself in that space. This journey has led her to become a financial coach to advise and guide people to build wealth so that they can plan their estates for prosperity. Financial coaching is one of her passions, and she has had opportunities to work with different categories of people in their financial journeys. She's also a governance professional and enjoys assisting organizations to assess their good corporate practices, including families, which are the smallest units of an organization. Whether you're 1, 2, 3, 5, some of you may be 10. Yeah. She is a seasoned expert in working with corporates in matters of corporate governance and has consulted widely in that space. So karibu sana, Happy Kilongosi. We are really looking forward to hearing all your insights. And also, we are looking forward to you demystifying for us what a trust fund is. I'm sure some of you have had trust fund babies. Who is a trust fund baby? And are you one? And how do you become one? And how do you ensure your people actually one? So I think Happy will take us through that. But before Happy takes the stage, I would like to invite Paul Katana Ngoa, the Sales and Marketing Coordinator at CPF, to just quickly, very briefly, Paul, walk us through everything that, give us a brief introduction of what CPF does. I believe CPF is one of those organizations that has just simply been able to cut across all industries and provide amazing services across all industries. For some of you, I think as you hear what Paul has to say, you'll be shocked at how you interact with CPF and perhaps all the things that they're doing to make your life a little bit better. So Paul, over to you. Kindly tell us a little bit more about CPF. Yeah, Paul.
Thank you, Robert, and good morning to everyone who's joining us, both from around and diaspora, and we say diaspora including Rongai. I believe that is what Robert mentioned. So Rongai, you're welcome to this session. My name is Paul Katana. As Robert had mentioned, I work for CPF, the group. CPF, I'll just give a brief overview. Maybe my colleague, you can give an opportunity for my colleague Happy to just share her slide so that I can quickly give an overview of how CPF is structured. Happy?
Please allow me to share.
Thank you, Happy. You can just go to the next slide on CPF. So maybe to introduce everyone, CPF, as you can see, it's one of the biggest entity in the financial service space. And you've interacted with CPF on several occasions by it providing very innovative solutions to the masses. We actually founded on a 90 years experience in administering pension scheme and administering one of our oldest scheme, which is the DB scheme. And we've been able to grow. And right now we are a group of companies, subsidiaries, and manage a portfolio of several schemes, almost to the worth of 100 billion with our 90 years experience. So we cut across the financial service sector with innovative solutions through fund administration in terms of pensions. We carry out gratuity management. We are training in the training and consulting conversations. We offer archival services for both individuals and also corporates. We also in the space in terms of insurance, we take care of insurance brokerage services. We have also have a medical fund management service that we give to members. We're in the property space. You can access properties from as simple as from the most affordable homes to high-end homes, and maybe some of the homes that you've seen outside there that you can be able to access. We have Freedom Heights Mall along Langata Road. You can be able to get a property there. Innovative in terms of your open space for people to be able to purchase homes in terms of under tenant purchase schemes, where you, instead of now paying rent, you can convert your rent into actually owning a house. We have that one there. We also have high-end homes for those people who wish to live in the best suburbs in town. Currently, we have for the high-end market for $1 million. I think for most of the individuals can be able to. In terms of infrastructure technology solutions, we offer ICT solutions, and maybe aware that they're using, and it was actually built by under the framework of CPF, is the eCitizen platform that people are utilizing. Actually, we actually digitized the national registration under the immigration to register and convert, doing digitization across board. We my colleague will take you through some of the innovative ways in terms of to enhance in terms of wealth management. And I think there will be a discussion to show the difference between wealth and investment management and estate planning, which will be there, and our CPF asset managers. We also run individual pension plans for individuals who wish to save. And these pension plans that we you can actually start by saving for yourself in terms of pension, and it's for as low as minimum of 50 shillings a day, just towards your journey of becoming one of the journeys to becoming wealthy and being able to save for your later years. Under that, we have also our digital learning solutions also being provided across board. This one, I think you utilize to get an award-winning solution that is there. You save as you spend. I know most of the times you say spend and then save, but as we say save as you spend, we actually want to award this solution. It's actually the solution that people are currently using under the Hustle Fund. Those want to be able to access the Hustle. I told once you take a particular amount, able to actually save. There's a money that goes towards your pension. For people to be able to actually save. We also started the foundation the other day. We're able to assist different individuals in the different space in terms of ensuring social security across different vulnerable groups. So we also have that also included. In terms of, in a nutshell, we provide solutions both, as you can see, for those who are in diaspora in markets like they want maybe Sharia compliant savings options, CPF is also there to be able to. And on that CPF, in terms of security for the members, apart from us being here for over 90 years, assets under management, as Alan mentioned, we are there with over 100 billion and growing. In terms of who we administer pensions for, we are looking close to almost to 600,000 or 700,000 members in terms of taking care of their pensions. Our solutions cut across within the borders and outside the borders. We provide solutions as far as reaching as far as Southern Sudan. We've done it in Uganda. We are also in the space in Rwanda, and also we are going outside there. We serve our clients as far as the UK in terms of our pensioners who are being taken care of under the CPF group. I believe in brief, that is the much I can be able to talk about CPF, and looking more to interact with you. We are a home of solutions, and you're most welcome. With CPF from our digital platforms, from apps on the Play Store and portal. You can also be served in our 9 regional branches currently existing, but we are actually in each and every county in terms of support for each and every of our members. So thank you so much, Robert. And I think without much ado, I wish to also invite Happy to take the team through that the wealth class.
Thank you so much, Katana, and good morning, everyone. So going straight into the topic of today, we are looking at financial planning, and most people think this has almost become cliche, but for me to bring it home, I'd like to, everyone can answer those questions, those 6 questions. If you live paycheck to paycheck, if you borrow loans to pay other loans, because we are saying taxes have gone up and life is not paycheck to paycheck. Are you unable to pay your utilities and bills on time? Do you have an emergency fund? And here an emergency fund is a minimum of 3 months of your expenses. Most of, as I coach people have no idea how much they spend. It's a matter of money in, money out. So do you have a clue of how much money you spend in a month? So if you do, then that money, you need to have it somewhere, 3 months worth of that amount. Do you get when discussing money? And then finally, is debt affect you? So if you mark, do you have? Then that would show you whether you're in a place or in a bad place. So this is what I consider a litmus test to testing, evaluating your financial situation. So we are all born, and at some point we leave this world, but before we do, the ideal position is that our active life of earning. So how do we desire our retirement to be? And retirement is not necessarily the 60 years or 65 years or whatever legal you're in. Retirement is when you choose to stop it for yourself. We all have definitely the reality on the ground. This is how the landscape of retirement looks like, at least here in Kenya, that will have 5% who still need to work so that they can earn. We have 49% who depend on people. And most of us, especially in my generation, we support our parents. Then 12% will be totally broke. 29 will pass on less than 2 years after they stop working because they do not, the reality of not having the employment or the roles they used to have has changed, sorry. And only 1% will be rich. 4% will be financially stable. So from this representation, we only see that 5% will be the people who are well-to-do. So how do we ensure that by the time we get there, we are within that 5% and not in the 95% bracket. Before you, for anything to evaluate, what are what are the things that are possible, will possibly be your roadblocks to achieve dreams? Most people would be because they procrastinate. So you don't get to start, you always are rescheduling when to start. Others, it will be your spending habits. So you find you're not, especially ladies, all sale signs attract you to buying. So is that what your situation is? Others, it will be because we depend on people, or we encourage that dependency culture. You find some people who will always ask for help and we enable them. So don't be an enabler, because you're supposed actually to ideally teach people how to fish, but not give them fish. Then we have financial literacy, which at least among the 4 problems, that is a good one, because you can read, you can get exposure and from sessions such as this, and you'll be able to be in a good light. So some of the excuses that we use is the state of economy is bad, especially now in Kenya, given the new finance bill that came into play in June. We are saying the economy is really bad. So, but the unfortunate thing is that you can do nothing about it. But as an individual, you can choose to be better or to put yourself above that economy being bad, because you have no control of how the economy will be. So there's nothing like enough. Okay, there's nothing like small money, because small beginnings, but as little as 5,000, even 1,000. And my colleague has said you can even start with 500 shillings. The thing is, you just need to start, and they say after 30 days of a habit, then it becomes your character. So just start, because it takes time for you to build wealth. But if you do not make the first step, then you have not made the first. You have not started to working towards your independence financially. Or the other excuse is that I will start after I buy. Maybe you say after I buy my dream car, after I buy whatever it is that you're wishing to buy. And if you cannot afford to invest, then clearly you cannot afford it. And that is how come many of us are living lifestyles that afford, and that is why we are struggling, paying debt after debt. We are just in a rat race. So if you can't afford to invest, there are things you should put a hold on it and exercise delayed gratification. Or I still have time to start. Maybe you're young, you're thinking you still have an eternity. I remember the first time we got employed, you're thinking 60 years is too far. I cannot even imagine working until I'm 60. But shortly you find the reality of that retirement is soon coming, and you really feel like you're not ready to retire, because you feel like you have not gotten enough. So you don't have time, because the earlier you start, the better it is for you. So just to put that into perspective, looking at that example, like if you're 30 and you can afford to put up aside 25,000 shillings diligently every month, and we make a presumption of a 10% rate, which from what our friends in Family Bank have said, give higher returns, use a flat rate of 10%. For the next 20 years, you will have 19 million in your account. If you choose to start only 3 years later with the same amount of money, 25,000, but you chose 3 years later, which 3 years is not a long time, then look at the difference between the person who started 3 years before you did and you coming in 3 years later with the same amount, a whole difference of almost 6 million. 5.7 is about million. So 6 million is quite a big amount of money. So this is just to show that you need to start with whatever you have, just start. Because the time factor, building wealth is all dependent on the time. So then how do we change our mindsets and start on this financial independence journey? So I'd like us to listen.
The difference between poor people, rich people, and middle-class people is not how much money they make. And it's not even how much money they have. The difference between rich people, middle-class people, and poor people is what they believe the purpose of money is. Poor people believe the purpose of money is to pay bills. That's the primary purpose of money in the mind of a poor person, pay bills. So the only reason they go to work every day is so they can get some money on Friday and hand it over to somebody else. Middle-class people think the primary purpose of money is to establish good credit so they can buy things they can't afford and pay it off over time. Rich people understand that the primary purpose of money is to turn it into more money. So I'm going to take the money that I make, turn it into more money than I had, and then and only then can I be wealthy. I can only be wealthy if I hold on to my money long enough for it to get pregnant and have some babies. I want to take every $100 bill I get and put it in the money maternity ward. That's the mindset that is necessary to develop the skill set of investing. Are y'all tracking?
Yeah. So where are you? Which category of people are you? Do you spend money fast or do you invest fast? So it's a mindset thing and it's a journey that you can walk. You may not get it right the first time, but just start.
The difference between
as you plan your life, you need to have at any one time, you need to have those 4 categories or 4 portfolios. First one, if you are employed, even if you're in business, you need to have some money that you know is your retirement, because at some you will stop actively what you do for money. So that money that you have set to manage, if you're employed and expecting a pension, have you looked at the projection at the time at which, how much money will that be? Is it sufficient to settle your, to sort out your lifestyle? So can it take care of your needs, do the things that you do, and replace your income? And can it sustain your family? Some people will reach retirement age and they still have children who are in school. And it doesn't matter that you have retired, so black tax will always apply even for the retirees. So that retirement package that you're expecting, is it sufficient? If not, and most of the times it's not, because research has shown that retirement, your pension is usually between 10% and 40, between 10 and 40% income replacement ratio, which simply means it replaces your income by minimum of 10% up to a maximum of 40%. So for example, if your salary right now is 100,000, then it means that your that replacement ratio would either be 10,000 or a maximum of 40,000. So if your 100,000 is not sufficient now, you can imagine what that means, that you need to survive with 40,000. So look at your retirement so that it informs you to start saving more towards it, so that by the time you retire, then you're having sufficient amount to actually cater for your lifestyle, that you do not find a shift. Remember, there's the first slide, earlier slides we saw, there are 29% who pass on because of retirement season. So that is because you cannot, you can't cope with your lifestyle because your income, your active income has stopped. So your second portfolio needs to be medical bills. So here you can explore the option of post-retirement medical fund, which we offer, is one of the solutions we offer at CPF. As my colleague Katana said, we are a house of solutions. So start saving for your retirement medical right now, so that by the time you retire, then you no longer contribute towards it, but then you will be sorted medically until you leave this world. And that will ensure that you still visit the same medical facilities or hospital facilities that you do while you're working. Because while we are working, we have the employer medical cover, and we go to those places like maybe the Nairobi Hospital, the Aga Khan's, you know, the good hospital facilities. What if you retire? Would you still be able to afford to be treated there? So for you to plan ahead, then you need to start saving towards your medical at retirement. And that just the same way medical cover works now, it also, you can opt to save also for your spouse, for the children that will still be under your care because maybe they are not through with school, that it's an option that is available under that solution. Then for those who will have children at their age of retirement who are still of school going age, please don't put that burden on your older children. We all agree, right? Life right now has become a challenge. So don't be the one to increase burdens for your own children. So plan for them. Then you need to have your emergency fund. You need to still have provision for your insurance because the fact that you have retired, you will still be expected to pay your car insurance. Because of medical issues, as which our body tends to be frail, and it is also good to plan for your interment, your last respect. So how do you want to be buried? Do you still want people to call for harambes for your burial? I always say that is institutionalizing begging, which is not per se a good culture. Let us do harambes for medical bills, for things which really are out of our control. But because we all know it's on, each of us going to pass on, can you plan for it? Let us be those responsible human beings that we plan our life in all aspects. So your car insurance, your disability, if you happen to have any, and last respect, provide for it. Home ownership, will you be done with your mortgage, or are you building? Will you have completed your house by then? And here is where we say, if you're building a home at retirement, then build a home that is applicable for your situation. Don't build a home like you're going to start raising 10 children in it, yet you do not have any at that moment. So do a house that is suitable for your current situation. And the way to assess it is that, is it still suitable for you, or will it be suitable for you even 10 years to come? Or you're building a big house that then it also gives you challenges to maintaining it, ensuring all the utilities are there, electricity, house cleaning becomes a challenge. So those two portfolios are the critical ones. Then you also need to have the aspirational portfolio, because all Jack and no play makes, all work and no play makes Jack a dull boy. So what do you do for fun? And it is good to have fun. But is that budgeted for? That is where the big question is. Is it budgeted for? So you can engage in philanthropy, and they say you cannot give that which you do not have. You cannot give from an empty cup. So philanthropy, you can only exercise it, and charity when you have something to give, not when you don't have something to give. So you need to plan for it well. What is your backlist? What is your backlist looking like? Have you costed it to see how much it would cost? When do you want to actually realize it, so that you plan strategically? Holidays or club memberships, whatever it is that makes you be at your best, plan for that as well. And finally, it would be very reckless of you to have all the three portfolios and fail to actually plan your estate. And I see many families doing that mistake. The fact that we will no longer be here at one time, why work so hard all your years and you forget to actually plan your estate? And this simply means whatever it is you're doing right now for your family, just put it in writing and establish a trust, which is the best instrument to manage your estate in the way in which you want, so that your status quo in matters regarding your family remains the same after you transition. So the first point where we start is doing an analysis or an introspection of your life, and you need to find out what is your net worth. We tend to know what is the net worth of celebrities around the world, of our politicians, of our leaders, because accountability in terms of how much they own as our leaders, but do you know what your net worth as an individual is? Is it important to know somebody else's net worth and not know what yours is? After you know what your net worth is, which is your total assets minus all the liabilities that you have, then that would be your net worth. Cash yield, this will help you to identify your dead assets. And here is those things that are assets, but do not give you any income. Like the idle plots that we buy. And Kenyans, there was a season, I think we were all crazy about plots. So we have plots everywhere, but you're doing nothing with them. You're waiting for them to increase in value, and you have no idea when that will be. So really, that is not an asset. If you put that money in an income generating instrument, it would be better off than buying land in some bundus areas, hoping that it will gain value at some date. But if you use professionals, there's a disclaimer there. If you use real estate, the professionals in that space, they would advise you which is the appropriate place to buy. It is not just that you own a plot, but it matters where is that plot. Then if you identify which are your dead assets, if it is those pieces of land, can you convert them to generate some income for you? So can you maybe list them out? Can you maybe start doing some farming activities? Do something so that it gives you money, however little, convert them from dead to some income generation. And finally, you need to identify what is your greatest risk. Are you only dependent on your salary or your business income? And that's it, you have no other source of income. And that would be your biggest risk, because should anything happen, then that means your life is actually doomed. So what actions do you take after you identify what your risk is that you need to wean yourself from that risk. Even as we do strategic plans for organizations, we identify risks and we find mitigating factors, or we find possible solutions to mitigate the risk. So for this case, if you only depend on your salary or your business income, then you need to wean yourself gradually from it so that you're not totally dependent on it. The strategy is that you aim to actually preserve your capital. So if it is salary, aim at preserving most of your salary and start pushing your expenditure to your investment income. So try and invest as much as you can so that the income is what is supporting your expenditure. And so spend the investment income, but you cannot achieve that if you don't pay yourself first. By paying yourself first, that is not what you put aside for pension. It is not what you put aside for any other thing, but what you put aside to invest, so that what you put aside and invest, and not, I see people saying they've saved first of the month, then 15th, you've gone to actually take it out and spend it. That is not paying yourself first. Paying yourself first is what you put aside from your salary. And remember, we said the best way to start is by try and set something for investment first before you actually spend. So put something aside and invest it, put it in somewhere where it is making you more money, then be consistent with it. We've seen the magical impact of compounding interest. So take advantage of that time. And then you must be consistent, because that discipline without consistency will actually also not take you anywhere. Someone said that money is a reflection of your character. So if you are disciplined, then it will also show in your, and if you start disciplining yourself with money, handling money, you will find even in your life, discipline will come naturally. And I said, most of us have no idea how much they spend. So take time to actually note how much you actually spend in a month. Reason being, the importance is that it will help you to ask what are the things you're buying or you're spending on which are really not necessary, and how can you get creative about it. And just even for your own knowledge to know how risky it is if you earn and spend all that you earn, then should something happen to your one income stream, then how do you survive? A good way or a tool that I consider very critical in assessing if you use this formula, for me, it is one way of giving you the motivation to actually save, because you actually have control or the power to determine when to retire. You don't necessarily have to work until the legal retirement age. So it is called the early retirement, the financial independence retire early number. So you have to understand or to know how much your expenses are in a month. You multiply that by 12, which will give you the annual expenses. So that annual number, multiply that by 25. So 25 is actually the formula. So then you do, so for example, if your monthly expenses is 80,000, annually that will amount to 960,000. So the 960 times 25 will give you 24 million. And I know this looks, to many, it might be quite a big number to achieve, but using the compounding interest and using the products that even our partners at Family Bank have for compounding interest, you will find that with time, you actually would get there. So if you use a very conservative rate of 8%, which is really conservative because we are having interest rates right now up to 14%, you will get that 1.9. When you divide by 12, which is the 12 months, it will give you 160. And you see your monthly expenditure is 80,000, which means you're earning more than what you need to live your life. So if you hit this 24, then it means you can retire, because if your lifestyle is at 80, and that is why it is critical to know how much you spend in a month. And even for those things, expenses that are not monthly, but you incur them in the course of the year, like your car insurance, like buying gas, stuff like that, like buying clothes, it's not a monthly thing, but you incur it. You need to put a figure to try and approximate how much would, if you were to split that in a year, how much would it be in a month? So that then 1,000 is your total lifestyle cost. So when you multiply that by this and get your 24 million, then if you hit there, and this is all your financial assets, it's not, real estate is not part of it, because remember, this is money. So it is maybe your pension, your SACCO, your money market, fixed deposits. It has to be financial instruments. So all of them summed up together, if you get to that number, then you've hit your independence, your financial independence. You don't need to work for money, but you can work because you enjoy doing what you're doing, or you're doing something that is changing the world. It's for fun, not necessarily for bills. So it is important because it helps you to define when is enough. Some of us are in the grind, working and accumulating and not knowing where to stop. And it is killing some of us because you have no idea where to stop, especially because earlier generations, we came from scarcity. So that scarcity mentality, the fear of poverty, we work and we do not know when to stop, and we gather even more than what we do not need. So it will help you to define what is enough. It is a tool which can help you determine when can I retire, when, or decide I want to work until I'm 35, I want to work until 40, or I want to work until 50. What age do you want as an individual, so that you can take a rest, slow down, and do things which are actually meaningful to you, not because the first reason of you doing whatever you're doing is money. Money is secondary, but you're doing it for your own value or for your own enjoyment. So you get the point. And that is a reflection of most of us, because not knowing how much is enough, we work, and in the process of chasing a lot of money, a lot of deals here and there, we lose what we already have. We don't know, you have understand why you're all over, you're like in a wheel, you're just in a rat race. So you're accumulating and accumulating. It is not giving you any value. You have no peace. You're fatigued throughout because you're chasing this green bag. But then when do you end? When do you stop it? When do you go slow? So that retiring, that number will show you when to actually take it slow and enjoy your life instead. So we have many income streams. As I said, it is you need to wean yourself from just being reliant 100% on either salary or business income. So we have, of course, salary is a source of income. You can have a business on the side. You can have dividend from your investments. You can have rental income from your rental houses. You could have fees from your consultancies. You could have capital gains from selling assets, interest income from investments, even winning a jackpot is also another source of income, but not reliable though. Royalties, if you're a creative or you've patented something, and this one, monetizing talent, is what for me is the most immediate that you can actually exercise, because we all have our talents. We all are born with a talent. So if you don't know what yours is, ask your friends who are around you what your talent is, and try and think around it. How can you monetize it and convert it to something to giving you money, because you need to make other sources of income, however little. So your income is like a table. You have one stand, then if it breaks, you have no board. So you need to have multiple sources that generate this income so that you're able to stay afloat all the time. So it will, for you, when you have more sources of income, it will help you to live above the inflation. So however, like inflation rates have been skyrocketing, and they're not coming down in a way that we would want. But since you can do nothing about that inflation, you can find other ways to earn money so that then you can spend, and that inflation will not have really a big impact on your lifestyle. Managing tax, because tax is guaranteed, you have to pay taxes. And if you only have one income, you can imagine the impact it has. I think right now in Kenya, it is almost hitting 50% going to tax. So you can imagine living on what is the remainder is really, really a burden and a challenge. So how then do you manage that tax? Is to find other sources so that then that tax burden is a bit lighter on you. For you to live your desired lifestyle, because you need to define, it is important for you to define what kind of lifestyle do you desire and how much it costs. Then you're able to live that desired lifestyle if you have budgeted and you know how much you need, and you have found other ways of making money. And for generational wealth, as an estate planner, for me, this is critical. We need to always plan for our families, because it doesn't make sense. You make so much, you have a lot of assets, then you leave it without any instruments to ensure that it is protected. It's actually 18 months from reliable research from RBA and the like. 18 months, that money is blown away. All those assets that you worked so hard for, taking loans, they're all sold. So why not protect and ensure that your people are still taken care of? Because we all know the money that you haven't worked for is very easy to spend. So sometimes it's not a fault talks, and for your family develop city to deal with sure that for you to sources of income so that you're able to provide the don't have tax if you have, so that you do it really complain. So for also important and how age generally relates with people say different. Even in school, they say the trend, even when you mark an exam, there's a 20%, I mean 10% who are bad, really bad, 10% who are exceptional. But the 80% is a general, like you can predict with accuracy, 80% will always fall in that category. So by within age 20 to 25 here, what is critical is establishing career. They're looking for information, they consume a lot. In your 30s, your career, most of the times, it's well established. And this is where you start making those bad mistakes of taking debts, of living above your lifestyle. And because one, you think you're too young, like retirement is too far from you, so you really don't need to save. And you get all the nice things and nice things are flashy, so you go for them, yet you can't afford. You have very minimal obligations at that stage. And this is where most of the times your financial drama, that is where it begins, or that is actually the root cause where it started. That age of you're 26 to 35, because you have very little obligation, you're a high risk taker at that time, you have zero investments, you don't think it is worth it because you still believe you have time. Then we start hitting your 40s, you actually see 60 is very, very close. You took a mortgage of a crazy amount. Your increment in terms of salary or business prospects are not that high. Family obligations have set in. And most of the times, research also shows that this is where, at the age at which corruption these are the easy category of people to actually indulge in corruption, because the pressure of time now is very real. And this is where you actually need to start planning your estate. Think about it, and a trust fund or writing a will does not mean that when you write it, you don't have an opportunity to change. You change it as often as your need changes, because life is dynamic. Then we have tips that along the way in my life as a coach, and this I've not done for long, but the period for which I've been, these are the tips or the things I have picked along the way, that for everyone, you need to educate yourself, especially basic accounting. And I know we don't like maths. I was one of those people who didn't like maths, but now I really appreciate it. So just learn some basic accounting and understand taxation for all those things you invest in. Do you understand the tax element? Because when you do, you might find that it is not as rosy as it appears. So the tax, because for everything in this world, there's almost no way that you're going to evade tax. But understanding taxation, then it helps you, is it evading or avoiding the good way of not paying tax, or so that you just understand. So understand also the investment instruments available, and by understanding investment instruments is by, do you understand the asset that is backing the instrument? If you don't, probably it's a scam. Then if you don't understand, always get an investment advisor, professionals to work with you. You will pay some money, yes, but it will help you to not lose money. Tracking expenditure, it's good. You're doing a lot of Ubers, you're paying expensive cable, which you're not using that much. You're maybe eating out too many times. It looks very little, but when you compound it, I mean, when you sum it up, is it worth it? When you're buying brands instead of utility, sometimes it's not worth it. So you can only cut down up to a certain level. Even if it is being frugal, there's a point at which you can't go lower than that, but there's no limitation as to how high you can go in terms of how many other income streams you can actually engage so that you make more money. Becoming wealthy is you need first and foremost to have exercise delayed gratification, learn how to make money and keep most of it by multiplying it so that you avoid that high income earners, but they're not rich. It's just a lifestyle to project to other people, but you really are not. When you look at the properly wealthy people, they don't look flashy the way the middle class do. Then debt is good, but only if you use debt to make money. If you use debt to make money, then you have won the game. So that the debt you take for whatever instrument you're investing it in, it has to give you a higher return than the interest for which you're paying that debt. Planning your retirement, I said it's just a number. It is not cast on stone. What kind of retirement do you want? And how soon do you want to get there? So how soon do you want to get there will inform how much you need to start saving now and investing now so that you hit your number at your preferred time. And while doing all that, your health is your wealth. So guard it jealously. Do you take your annual medical checkup seriously, ensuring that your medical cover is always active, saving for your post-retirement medical so that you do not have the obligations, financial obligations at retirement, but you still have the luxury of getting medical assistance when you need it, so that you avoid WhatsApp groups being formed because you need to be taken to hospital. So your kids start forming WhatsApp groups because mom or dad is sick. Disability insurance, you need to have that in place if it is applicable in your situation. Then one thing that for me blew my mind is that you need to consider your salary or your business income as seed, that is not harvest. And you know what farmers do with seeds. When you plant seeds, you get bumper harvest. So that salary of yours, that business income of yours, what can you do to multiply it? And for those who are salaried like us, no one will pay you enough to be wealthy. So how much can you save of your salaries? Wealth of your own. Income streams, even the Bible in Ecclesiastes, it says 8, but have a minimum of 4, minimum. I said we all have talent. Think about it, how you can monetize the talent that you have, and that doesn't need even capital to start with. Buying a car, to assess whether you can afford it, you need to have 20% down payments. You need to be able to pay it within 4 years, even if the facility you're getting is more than 4 years, but you need to have the ability to pay it in 4 years. And the deductions that you're going to have needs to not be more than 10% of your income. So if you meet that 24-10 rule, then that car is within what you can afford. If not, you're driving a car you can't afford, and that explains why you're in a debt cycle. You're always struggling and you don't feel balanced. So that is how you assess whether you are ready to buy the car. Whether for buying a house, whether it is mortgage or rent, it doesn't of your income, then you're living in a house above your means. And that is why, again, you will not balance. If you're buying a house, you need to ask yourself, 10 years to come, will this house still be applicable to my needs? You may be having small children now, or children who are maybe high school, and you know when they go to campus, they're no longer staying with you. You've bought a big house, everyone, their room, all master and suite, but when they leave, is it still applicable? Do you need all that space? So 10 years to come, will that house still be okay? If not, then maybe it's better you rent and buy when you're ready to actually settle there for longer. Or if you want, after those 10 years, when you want to dispose, will you be able to attract the market, the kind of money that that house of yours is worth? And then 20% down irrespective of whether the fact, irrespective of the fact that you may be having access to a facility that gives you 110%. Number 11, for those who want to diversify and get in the securities exchange or buying stocks, how to know how much to put in stocks is the formula is 100 minus your age. So if you're 40 years, then 60% of your portfolio in stocks. That as you age, the portfolio amount that is in stocks will always decrease. And even in the retirement space, we say, as you grow older, you push all your portfolio in very secure, steady instruments. One of those, that portfolio goes down. And for spending, simple rule is that wait for 24 years. I said money is loud, it talks. So wait for 24 hours before you spend. And if you still want that thing that you wanted 24 hours before, then maybe it is important. But you need to spend that, to divide that bonus or that lump sum in 3. For entertainment, a third for entertainment, a third towards your retirement package, and have debt, a third towards your debt. Then that windfall that you've gotten will be spent wisely. So for estate planning, you need to have a plan. And I said, this is simply put, you writing what you do now and putting it on paper. If you pay fees, then you give instructions for fees to be paid. For the people that you support, your parents, just put that in writing. And that is estate planning, where you define your beneficiaries, you define who will be their guardian. And if this guardian will not be there, then who is the alternate guardian? And even if that alternate is not there, then what is the process to get to onboarding a third guardian? And who will manage your estate? Who is going to be your executor? So you will name all those. Who is your medical provider if your family is on medical cover? You say all that in paper. This is what usually, and as you do that, you're supposed to be talking to your family, because even in organization, we have a vision and mission which we are always constantly being reminded of. So even at a family level, talk to your people so that they know what your financial vision is, because if you don't, this is what happens. Emphasis on that, looking at the ages, all ages are represented. So money cuts across all ages, the young through the old, their children there, their spouses, you can see there's no difference. So if you hold on to it without talking to your people about what your vision is, then it will be recklessly spent, and no wonder 18 months down the line, there's nothing. However much you had amassed, then there's nothing. So put mechanisms in place to ensure that everyone is taken care of, but in a sustainable manner, the key being sustainability. What a trust fund does is you can set there are 2 ways of setting up a trust. You can do a living trust where you set it up now for each. You can also, the second statement, where you identify assets that will fund you're no longer there, and then the instructions will be carried. So when you're setting up a testamentary trust, this is a trust that is going to take effect after you've transitioned from this world, is where the trustees will collect all your assets and administer or manage it for the sole benefit of the identified beneficiaries. So you'll have listed who your beneficiaries are and to what extent and frequency of their benefit will be. So the trust will pay fees for the beneficiaries, it will pay their upkeep and subsistence, it will pay rent and accommodation for students who are living in hostels. It will pay for medical expenses. It will manage the assets of the family. For instance, if the family had a business or they had a farm, then there'll be a contractor who will manage the business and the money will be plowed back in the trust, and the trustees will be able to give that money or send that money to their children, because some families' children are all over the globe, so they'll not come back home to manage the family business, but it can still be managed and that money can come wherever they are in this world. And then it's also trustees conduct do prudent investment so that it is not just drawing down from the trust, but also growing the same. I said the key being sustainability. Some of the assets that would help you to set up a testamentary trust, because I know many people, when you tell them about the trust, they will say, yes, it's a good thing, but I don't have money. You don't need to put money aside now. You can use these assets listed there, like your life insurance, the property which you're holding with your spouse, retirement benefits, that is your pension, your SACCO savings, your CDS account if you invest in securities exchange or their central bank bonds, then your bank accounts through executing what we call a payable on death form. And what you do is that on these assets, you have to change the next of kin and appoint the trust fund as your next of kin. And you will have then at the trust fund sign the grant letter, which has the instructions as to how these monies will be appropriated in managing the listed beneficiaries. And maybe it is also important to note, to state that beneficiaries are not restricted to your blood relatives. It could be anyone. It could be charitable organizations, churches, anyone who you want to benefit, you will provide for them in that. And the beauty of trust fund is that it doesn't go through probate process, which is the court process for validating a will or establishing who the beneficiaries are. It doesn't require that beneficiaries have to attend the reading of the will. So trustees will deal with each beneficiaries as has been provided for. So that makes a trust a very suitable instrument to plan your estates. Looking at now the investment instruments that we have, we said money doesn't go to people who need it, it goes to people who multiply it. The fence is always greener on the other side, but it's not greener, it is that other side they're watering it. So how do you water your side of a fence to have green grass? And how do you multiply your money? So you could use property, which is real estate, land or buildings, insurance deposits, which our partners offer good fixed deposit rates, equities, SACCOs, and particularly for SACCOs, I'd like to draw your attention to the share capital, which usually pays a higher interest than the contribution rate. The contribution amount. So you could utilize that aspect of the SACCO to grow your money. Pension funds, and I said, looking at your lifestyle, is your pension sufficient? If not, then you can use the additional voluntary contribution route or the individual pension plan route to beef up your pension so that it is sufficient for you to meet your needs. Money market funds, treasury bills or bonds, all those are available, and working with either with the CPF and Family Bank, we are partners and we can assist you to actually make the best and have the optimal advantage of all those assets. How do you assess, how do you select where to invest? You need to know where your money is being invested. For whichever instrument, you need to know where is that money being invested, what are the risks associated with it, and what are the returns, and I must say also what is the tax element. So it is a return vis-a-vis the tax element, and what are your goals. For you to remain consistent with your saving, you need to set up goals for which you tie. So if it is retirement, then you know what your retirement package looks like. So, and what you have pushed to your, if it is your holiday, then you know how much you need, you use something else to save for holiday. Creating a fund to maybe pay fees for your children, you need to project how much it will cost for you to educate your children, then set up something that the investment income will be sufficient to actually pay that fees. If it is a house, which instrument do you want to use to actually achieve that goal? And while you're doing that, how else would you leverage that instrument so that it keeps you consistent, it gives you the motivation. And insurance is good. We offer insurance services at CPF, and even Family Bank have some insurance covers. Insurance is good because it mitigates risk. It will make, if you suffer some loss, then you'll be able to get back to your original financial position. But insurance is not investment, and don't confuse the two. Investing is where you multiply capital. Insurance is, it will give you, try to reinstate you back to your original position. If you choose to invest in real estate, how then do you assess, whether or not to engage in that particular asset class? You can use the payback period, and here it is said that the payback needs to be between 6 and 8 years. If it goes beyond that, then you need to think twice whether it is an investment or you're doing it for something else. Capital gain, it needs to be, when you're selling it, it needs to be above inflation. The rental yields, what is the annual income over your capital outlay? Does it make sense? So the benchmark here is using the T-bill rate at that moment, then you will know whether that makes sense or not. Total rate of return, where the rental yield plus capital, how much is it? Is that what you're looking for? Does that meet your goal? And the NPV. So, and I would also stress that for real estate, especially people in the diaspora, please use a proper realtor so that you don't cry premium tears. People have tried to take shortcuts, then you end up with premium tears. My colleague Katana said we are a house of solution. We have Laser who do everything with real estate, and we have Family Bank where you can channel your money. Then you are assured that you are not going to lose. Yes, you'll pay for services, but you will not cry. You'll not have premium tears. You will have exactly what you want. Comparing whether you want to engage in real estate or financial assets, depending on the goal that you have set for yourself, because all of them are good, but you need to align your investment to your goals. So this is how you assess. We have on one end real estate, on the other we have financial assets. Looking at the returns, this is between 7 and 12 currently, and here we have between 8 and up to 16 for the time being. That is how our market instruments are looking, financial instruments are looking like right now. For real estate, it's very capital intensive. And remember, you have caretaker issues, vacant periods, repairs, refurbishments, distress costs, especially if you're not around to manage it. You need a reliable realtor to do that for you and minimize the pain points of that particular asset class. But on the other end, you have compounding interest. There's very little that you need to do on your end. If you use the individual pension plan, then there's a tax relief element, which means your compounding rates will be, in quantum, would be a bit higher than an ordinary financial instrument. So as we close, what you're supposed to do is measure your passive income. Remember, I said salary or business income is not much until it is planted, nurtured, and you harvest. So for you to measure success, your financial success, start measuring how much is your passive income and how much has that passive income replaced your active income. So you need to set your goals properly, invest seamlessly. I said attach investment to your goals, track your progress so that you see whether it is still applicable because times change. So track your progress and take the lessons as you go by. So for you to say that you have hit now that financial freedom, you need to have set up a trust. You need to have defined who your beneficiaries are, because some of us, it is not just our children only or spouses. We have maybe our siblings, our parents, people, other orphans we take care of. There are many other people who are our beneficiaries. So list your beneficiaries properly so that they do not become disadvantaged when you have transitioned because your other beneficiaries think they are not worth being. Your property, how is it registered? Do you have your title deeds? Have you engaged a tax expert so that your assets are at tax efficiency, operating at tax efficiency? And are all your assets documented so that at any one point, it is not a challenge tracing where your assets are, so that you don't lose. Some people lose, some families are not aware that whoever, maybe their breadwinner, had some assets elsewhere, and other people who are the non-intended beneficiaries end up benefiting from it and not the actual intended beneficiaries. So make sure you document where your assets are. Then that will mean you have attained your financial freedom. As we close, you can start by, we said you just need to start. So you can sign up for CPF asset management. We work closely with Family Bank. You can sign up as a CPF with CPF Mwamba Trust Fund, where we actually manage beneficiaries. And maybe at this point I can mention, we manage 6,000 beneficiaries across the world. We pay fees in many countries across the world, and we pay directly. We pay directly for school requirements. So, and we also, for diaspora clients, we manage their relatives locally, but with money from the diaspora. So you can have all your wishes carried out without fear of misappropriation or the money not going to your intended purpose. And remember, as Shaquille O'Neal says, the only person who can really motivate you is you. You can hear nice things, you can say they are good, but if you don't motivate yourself to start today, then most likely you will not go. So thank you. I take this now back to, is it Katana or Evelyn? And I welcome any questions or clarifications at this point. Thank you. Or Robert, yes, back to you, Robert.
Thank you so much, Happy. So many nuggets, so much covered. I think that was such a wonderful, wonderful, wonderful presentation. I've also been checking the audience in the level of retention, and most of our audiences are still with us. This is a subject that we're clearly very interested in, and I think you covered it in detail. I can see a couple of questions here regarding the presentation. I believe that will be shared as well as the recording of this webinar, so that you can also review all the learnings that you've learned here today, as well as review some interesting tips and facts. I was listening very, very carefully, and I think one of the things personally that came across to me is 1% of us will be rich. I think that was at the beginning of the webinar. I think by the end, we should have about 2 or 3% of us actually becoming rich now, with all the insights Happy has shared with us. Another thing that I found quite interesting is 60 is not that far away. So if you're 25, 30, you have time, 60 is just around the corner. So make sure you're taking advantage of all these opportunities in front of you. And lastly, if you're above 40, you're prone to corruption. I don't know those statistics, whether we should submit them to the DCI, or but I found that quite interesting. So thank you so much, Happy, for that wonderful presentation. We're not, I think we have gone quite a bit over on time. So we will just jump right into the Q&A session. Happy, I can see some questions already here for you. We'll just be taking 2 questions. If there are any questions that you may have, quickly put them in the chat section and chat section in the Q&A section so that we can quickly address that. We'll take Happy. I can see a question here. How do you pay yourself first and how? From Hesbon Maore.
Okay, we take them one by one?
Yes, one by one.
Oh, okay.
Quickly.
Paying yourself first. Thank you for that question, Maori. Paying yourself first means when you earn your salary or when you are doing your books at the end of the month, you're a businessman, then you set aside a certain amount, and it doesn't matter how much, but the ideal is between 20 and 30%. But when you're starting, that might not be possible. So set aside something. However, even if it's 1,000 bob, and put it in an investment instrument like a money market, asset management, and make it a discipline. Every month, keep increasing. If you're able to, as you pay down your debt, as you're able to, you keep increasing that number, because remember I said your success is looking at that investment income. Is it able to take up a big chunk of your lifestyle? And it is possible. It's when you start, yes, of course, when you invest 1,000, maybe you get a return of 100 bob. That is really nothing, but don't give up, just keep going. You need to embrace also the attitude of gratitude. If I give you 100 bob today, I actually expect you to refund it. See, so keep going and look at what that 100 bob would do in your budget. So try to push your expenses as you go along on the investment income. So as it starts getting to a good, you can pay a few bills here and there, it will motivate you to invest more so that then you get more. And you see, this is under your control. It doesn't matter whether you have a job or you don't. If you have attained even at least 50% of your expenses being managed by your passive income, nobody has the rope on your neck. So that is what it means. You set aside money every month or however frequently you earn to invest, and the investment you don't touch. You can only touch what comes out of it, but not the capital. I hope I've answered you, Mauri.
I believe you have, Happy. Husband, I think Happy will leave her contacts in the chat so that if you need to reach out further and discuss a little bit more, she's readily available. We also have another question from Helen Otieno. What is the Henry lifestyle stated in your presentation?
That is the high earners not rich yet, and many of us are there. So you really look, you're doing well. You're paying Tom to pay, you're borrowing from Paul to pay John, but if all that, if the credit lines, the Tala, the Mshwari, the Fulizas are not there, you can't support what we see. So we see you're doing very well, you're driving a very nice car, you live in a very good neighborhood, but you can't support it from what you earn. It's actually way above. And I'm challenging every one of us, just go and do a calculation of how much you spend. And the best way to get to know with accuracy, take 1 month or 2 months where you don't spend cash, spend with your mobile, spend through M-Pesa or bank card. So swipe everywhere, and where you can't swipe, use M-Pesa to pay. Don't exchange anything for cash. For a month or 2, you will be shocked and you will wonder how or where that's your salary will be way below what you actually spend. For most people that I've come across, that is the reality. Then you will see how you're borrowing to sustain your lifestyle. It is actually not what you can afford. So that is simply what it means.
All right, thank you, Happy. Sure, there are a lot of Henrys on this webinar, and they can relate. If they had their videos on, I think they would all be nodding. I found myself nodding a little bit as well, not so much, but a little bit maybe in terms of the spending. Now, we also have another question from Elizabeth Yegon. I don't understand the issue of trust fund very well. It is different. Is it different from trustees? This is out of fear of a recent case that was in the media where trustees were taking advantage of the beneficiaries, leaving them with nothing.
Trust is where you actually give instructions. This was just a webinar where we are focusing on all that you need to do for financial independence. But if you were to have a session on trust, it's really wide, it is long. That is why I couldn't get into the nitty-gritty, but trustees are in an equivalent. So they are the apex of managing that trust. And a trust is, you could say, it is the company, which is now your assets. Like you, and it's very simple to set up. You just say, I as Happy, I have this number of children, pay fees to these respective schools. These are the account numbers. Upkeep, this is what is sufficient for them. When they grow up after college, I want you to maintain an equivalent of this much. And after maybe for you to motivate your children to go to actually go to school, because we all know our kids, there are those who are good, there are those who are not, they're all our kids. So how do you then manage that they stay or they leave what you'd want to see? So if you know there are those who really are not keen in education, you could put in your trust saying, if they get a first degree, then they get this. If they get a second degree, they get this. If they happen to get married, then they get this, an equivalent. You provide for that. If I die, I would want my funeral to be done like this. This is the much I would want to be taken out from my my trust towards my funeral, because I don't want those funeral committees for Harambe. Your funeral committee to plan, okay, but not for raising funds so that you get buried. If you support your parents, you could say, pay whether it is land rate for my parents' house. If I have a house girl, to be paid like this. If she stops working for my household, then this. Because all those things, you just put down what you do now, but you're putting it in paper. That is so that then that works. And I know the media case you're talking about, we all know journalists always sensationalize issues, but if you were to look at it, kids and their expectations was very different from what their father implemented. So they expected that they will take control of the assets, but they realized that their dad, knowing them clearly, had put the assets in the trust. So they are pulling and they want to paint, because for a trust, you cannot sue the trust, you can only sue the trustees for not managing the trust in the way that you said. And when you're setting up a trust, you also have somebody that you call the executor. And this is the person who is the liaison between you and your trustees. I mean, you and your the trustees and the beneficiaries, to ensure that whatever is in that grant letter is executed as said. And the executor has the power to sue that the trustees are not doing well. Just the same way shareholders reprimand the board of directors if they are not carrying out the mandate which was given to them. In a nutshell, that is how a trust works.
Thank you so much, Happy. I think we may have to invite you again for an entirely different topic around the trust fund. It's quite an interesting one. I can see quite a number of chats in the chat section related to CPF products. We have the CPF team in the background kindly address some of those questions related to Mwamba Trust, the rates and all that. Maybe you can give people a bit of a guide in terms of the CPF asset managers. What can they expect with that as we close? So I see Paul Katana's hand is up. Paul?
Yes, thank you, Robert. And maybe to highlight to the attendees, our CPF we want to come in a great way in terms of assisting in terms of the questions which are there. So we have opened up an opportunity for the first 10 signups. They will be taken through the class in terms of they'll have a free session, 1 hour free session for facilitation on understanding how to do investment, and also a session on wealth management. So we are giving out for those ones who wish to sign up, we'll have an investment advisory session with one of the appointed relationship, and then we'll also have a financial advisory session for them. So in terms of how do they go ahead, how do they plan, where exactly can they be able to carry out the investments? So for the 20 people to sign up, I'll give them a free session for them to go through this one. Yes.
Perfect. Wapi makofi ya Katana? For all those asking about CPF services and how you can access them, Paul, I think, has just given us a wonderful offer. Paul, maybe if you could just clarify to our audiences, how do they register for this opportunity? Is there a link that you're going to share in the chat?
Yeah, we'll share a link in the chat in terms of a communication link. So they can quickly request through sales@cpf.or.ke. It's going to be typed on the chat link. So they can just share it on sales@cpf.or.ke, and immediately we'll be able to respond to all the needs and all the ones who want to grab the opportunity for them to enjoy this journey. And they'll get even more nuggets to know how at 40 you will not be listed as one of the corrupt people.
Thank you, Paul. I'm sure you've all noted down that email address. Don't waste any time. Start typing away. Take advantage of that opportunity. Can see a lot of engagement. Helen, you should be the first on top of that list. I've seen you asking quite a number of questions. Send an email to the CPF team. So thank you, everyone, once again. Big thanks to Happy. I think that was just a wonderful presentation. We are not doing so well on time, but that's what happens when you have a very insightful and engaging session. So with that being said, as we look towards closing the session, I would like to invite Family Bank, more specifically Tabi Washinga, the relationship manager. She's a relationship manager for high net worth individuals, right, at Family Bank, to give us some closing remarks as we look to end this session. So Tabi, karibu sana. You can karibu sana, Tabi.
Thanks, Robert. Hi, everybody. Thank you so much to all of you for logging in, for having us. I have learned so I want to be rich. It is not so far. Hoping to be amongst that 1% who is rich after this. So anyway, I want to just introduce myself. My name is Tabi. I take care of high net worth individuals in the bank. The bank is, it is so important for Family Bank to support each and every one of us in our journey to financial wellness, financial fitness, and to ensure that all of us are actually meeting our goals. And we do that by various ways. We have instruments, we have solutions that assist us to get to here, whether it is short-term. If you'd like to save on your phone, you don't have to come to the bank and fix your money. If you want to save, we have an app called Pesapap. You save, you fix your money for 3 months before you decide what to do with it. For 6 months, you can fix it on your app, on the Pesapap app. If you'd like to do it for 1 year, however you'd like, that's one way we can do it. So, I mean, we've said you start with 500, with 1,000, and we are happy to do that. If you'd like to have an account that, gives you an opportunity to transact, pay yourself, we have accounts that have offerings, that have a bundled offering where you can do standing orders. You can, send that money aside, put it in your savings account, fix those funds in an account, and we are happy to negotiate with you for good prices for 1 year, for 6 months, for 3 months. We're really just invested in ensuring that you're meeting your financial goals. We have accounts, we've got prepaid cards if you want to help your children to start this savings journey. You know, for so many of us, we learned this very late, unfortunately, and I don't think that's what we want for our children. So get them those cards, teach them how to, you know, track their expenses, teach them how to save early. You can get 2 cards, you can get 3 cards off you don't have to have an account. Teach them how to start saving early. I wish so many of us got that information early. So we've got so many ways where we can just help you meet your financial goals, whether you want to save for that holiday in December, whether you want to buy a home, whether you want to buy that plot, whether you want to invest in shares, we are happy to support you. So reach out to us. We are more than happy to be there to meet all your financial goals. So I want to say thank you to all our esteemed customers who've joined, who've listened, who've honestly sat in through all this time. This is a really want to get to where you want to be financially. And we are so happy that you got to spare your precious time to be with us today. We want to say thank you to Happy, who has taught us so much. For me, I just feel like compound interest and my money in the maternity because I needed to grow. So if you want to be like me, please just reach out to us. Let's advise you on ways. I mean, don't have money lying in the bank. We can put it in your savings account. It's earning you money. What do you do with that interest? Again, let's fix it over. Thank you so much, Happy. You've taught us so much. Sometimes you think that you know, but you don't. So you've taught us so much, and we want to say thank you to all the dedicated teams who've made this happen. It's not, you know, it just didn't happen. World International, thank you for helping us to get this done. Thank you to CPF, and thank you to my team and Family Bank. Team at Family Bank, together, we appreciate each and every one of you. So we hope that everything we've learned today will be beneficial as we embark on our financial journey, and that we are able to get to where we want to be. Let's not start tomorrow, let's start today. And as always, Family Bank is ready to support you to meet your financial goals, and we're excited to meet you. Speak to us, you can chat if you'd like us to reach out to you, like we are happy to. We're all trying to generations and everything, and we are happy to be with you. So thank you so much to everyone. I don't want to take any more of your time. In case of anything, you can just chat on the chat box. We'll get back to you and we'll reach out to you. Thank you so much, and back to you, Robert.
Thank you, Tabi. I think we all want to be at some point handled by a high net worth individual relationship manager. And I think through this webinar, we are closer to that than before we began. So thank you so much, Tabi. Great. I think we can bring this session to a close. Just to reiterate everything that Tabi has said, we just want to take this opportunity to thank you all, to our audiences for joining us this morning, for staying during the entire session. We really are honored to have you on board. To Family Bank, a big thanks to you. Without you, all this would not have been possible. To CPF, thank you. Happy, I think you've changed the lives of so many people in just that 1 or 2 hour session. And we'll be looking forward to seeing what other tips CPF can give us about how we can grow our wealth. To our panelists, there are a lot of people in the background, panelists who made all this possible. Joyce, Jennifer, who did the presentation at the beginning of this webinar. We thank you all for your contributions, and the backend team. There are a lot of faces that you can't see that have done quite a bit to make this webinar a great success. So thank you to everyone. Feel free to share. We also have, this webinar is part of a 2-part series. This webinar was targeting primarily individuals in the diaspora, high net worth individuals, middle income earners. We also have another series of this webinar that is going to happen tomorrow. If you haven't registered for that, the link will be shared in the chat before you leave. Kindly ensure that you stay tuned for that so that you can register for that. As you can see, we really do have quite a bit to share with you. So register for that. If you know anyone who maybe find that useful, kindly share the links with them as much as possible. The recordings for this will be shared with you via email. You can also head on to our Facebook pages, to our Facebook page to access it, where you'll find a recording of it. And I think with that, I just want to say a big thank you from everyone here at Wild International. As an organization ourselves, we are also very keen in serving our customers. And as such, if you head over to our social media pages, you will notice that if you have undertaken any one of our programs, you can head on there and compete. We have a very exciting giveaway there. So head over to our Instagram pages, LinkedIn, Facebook, and simply participate in that giveaway. So with that being said, I think we shall bring this webinar to a close. But before you go, kindly make sure you register. We also, as you may have heard, Family Bank has a new and exciting product called Queen Banking. We have a video shortly that will play as you sort of register for the session tomorrow, as you're also clicking through the various social media channels for both Family Bank and CPF. Kindly take some time before you leave to watch that video and see how that product can help you. Thank you all once again. I have been your host, Robert Njenga. Have a good day ahead. To the backend team, over to you.
Every day, millions of women across the world seek to bridge the gap on social, political, and economic inequalities. They seek a partner to walk the journey of life with. Women are the heartbeat of our society. They raise and hold our families together. They are a significant force driving economic growth. Family Bank has made a commitment to bridge this gap, to be the partner that our women so much seek for prosperity, to be the partner at the heart of every woman seeking growth and progress every step of life. Family Bank is where every woman is valued. Your financial partner dedicated to empowering women, giving you access to credit, making dreams a reality. We are here to build and grow our women. We pride ourselves in offering the best savings and investment options. Our women insurance proposition is unmatched in the industry. We are more than your financial partner. We educate and inform you so that you can know better to do better. Well-being, because your success is the heart of the family and our business. Ladies and gentlemen, now introducing Queen Banking by Family Bank, walking with women for life.
With the backend team, kindly continue playing the Queen Banking video. We also have Rose in the chat. She has left her contacts there. Reach out to her if you have any questions related to Queen
Millions of women
Banking.
across the world seek to... Every day, millions of women across the world seek to bridge the gap on social, political, and economic inequalities. They seek a partner to walk the journey of life with. Women are the heartbeat of our society. They raise and hold our families together. They are a significant force driving economic growth. Family Bank has made a commitment to bridge this gap, to be the partner that our women so much seek for prosperity, to be the partner at the heart of every woman seeking growth and progress every step of life. Family Bank is where every woman is valued. We are here to build and grow our women. We pride in the industry. We are more than your financial partner. We educate and inform you so that you can know better to do better. We connect our women to other like-minded women so you can thrive in the power of networking and market linkages. We care about your well-being because your success is the heart of the family and our business. Ladies and gentlemen, now introducing Queen Banking by Family Bank. Walking with women for life.